Hey guys, we're back. Another Wednesday. Is it just me, or do these Wednesdays just come flying in and, no regard to the way I feel? I swear this time is flying by. You young people out there, that you guys think you got all the time in the world, man. When you hear the older folks say time flies, it really, really does. So enjoy it. Don't put off things that you want to do. Don't put off investing, saving, all that good stuff, right? So, because next thing you know, time is done. It waits for nobody. So, anyway, we're here back with a another weekly options update. I do this every Wednesday. For those who don't know, I share all the trades that I've done from the Wednesday prior week to Tuesday's close of the current week. And so that usually encompasses 5 days of trades, and unless, of course, there's a holiday or something. So that being said, let's get into it. There's not again, just like last week, there's not a whole lot really going on. For one, because the market is really volatile, and I expect that to continue. So I'm kind of in a holding pattern. And two, I really kind of simplified my positions from just a couple of months ago, right? I used to have, uh, you know, uh, butt ton, if butt ton is a actual metric of positions in single stocks. And I've whittled that down a lot further, and, trying to concentrate on ETFs and higher quality stocks, or things that I actually like, right? So here we go. Let's start off with the closings for the week, and this starts on last Friday. I made no trades on Wednesday or Thursday, closing trades, and I had that lemonade put that I put on to play earnings. Now, you guys know I hardly ever do that. But I have a pretty high, I own 100 shares of Lemonade, and I have a pretty high cost basis. And I was trying to see, if I got assigned at this 20 strike, I would have been fine with it, because that would have reduced my cost basis quite heavily. But Lemonade initially, I think this was a 19 strike actually. Yeah, I entered that wrong. It was a 19 strike. But anyhow, it's neither here nor there because it expired. Worthless. It initially went in the money after hours, after they announced earnings, and then they bought it up in the next couple of days. So this one expired. Worthless. I tried to buy it back actually, but there was nobody, there selling. So 3 days hold, profited $59.70 on that one. Grab. Grab is a very old call that I bought back in December. I bought it a few times just to average my cost down. Grab is Southeast Asia's kind of like Uber, Lyft, and ride sharing and food delivery, all kinds of stuff. And I had bought I ended up with three leaps, three leap calls that expired out to January 19th, 2024. My average cost was $2.81. Ended up selling it on the 28th, which was Monday, for $2.99 net. So I made $54 in 76 days. Long time to hold that for that kind of money, but I just wanted to get out of it. I do like the company still, but I didn't want to be in those leaps anymore. And it was also in my Fidelity account. Stay tuned to Saturday. Watch Saturday's video, because I'm going to kind of explain my strategy going forward with these options and some of my other accounts, and what I've invested in. Some of you guys don't know, I'm kind of semi-retired. I do earn money here and there, on different things, side gigs, and my business is, probably like 1% alive. So I'm trying to come up with a strategy to make this work, and Saturday is going to be a good reveal about that. So I'm trying to consolidate accounts is basically what I'm saying, and Grab was in there, so that's why I got out of it. But I am not done consolidating accounts yet. Now TNA, this was part of a roll from way back, I think January, maybe even December. It was a 55 strike. I peeled the profit off of this one. I was going to let it go to expiration, but had an opportunity to buy it back, lock in some profit. See, I bought it back for 286. I profited 256.59 there, and then I resold what I left on the table, which was about almost $300. I resold some safer strikes out into April, and we'll talk about that here shortly. So that's it for the closing transactions. Now let's take a look at what we opened, and it wasn't very much either. So we'll sort that out, and we'll come down here to 228. Now there's the TNAs. I said I left about $300 on the table from that trade, so I put it back, or how would you say that? I made it up here by selling 2 puts out to April 14th at a 45 and a 40 strike, and I got $229 for one and $152 for the other. So that covers what I left on the table of the one that I closed out. Now SOXL, the semiconductor 3X ETF, I did go and put a $20 put, expires April 14th. I got 80 cents or $80 for each of those contracts. I sold 2 of them, so $160 for SOXL at a 20 strike. QYLD, I went out to April 14th and I sold a 19 strike, and I got 25 cents each, and I sold 5 of them. So I got 125. Actually, they paid me to put on these trades, so I got $125.74. They paid me 74 cents to put on these trades. At $19, the dividend would be about 19-20 cents. So I'm getting a little bit more than what the dividend would be if I own the shares. And I'm fine even if it got to 19 by taking assignment. So it's kind of like an advanced dividend, right? So QYLD, 19 strike, 5 contracts, $25 per contract there. Last but not least, Bank of America financials have been getting hit because there's, talk with the Russian-Ukraine thing and the financial markets and who has exposure to Russia assets and all that kind of thing. And it's if you look at it, I didn't go deep dive into analyzing what company has the most exposure to Russia and all that stuff. I just, from what I saw, that it was a very small, tiny percentage of, all these banks' overall assets. So I was looking at Citigroup because they actually revealed what they had, and I didn't like Citigroup as much, even though I could have got safer on the strike, or at least further down from its current stock price. But I went and looked at, the majors, right? And I looked at Bank of America, and I liked the chart setup. And let's take a look at the chart setup here. We got Bank of America, very large cap, is how Fidelity has it. PE of only 12, trailing 12 months. So, it's only about a 2% dividend yield, so not that great. But if I were to be assigned Bank of America at $38, I would be okay with that. Now, I was looking at the chart and I saw the support levels, right? If you remember last week, I talked about support levels. And right now, Bank of America is sitting right on support at 42.47. It hit that a few days ago at 42 and bounced back up, and it's hitting it again at 42. It really would have been good if it bounced up from here, if we have a bounce up off of that. tomorrow, and that would create a little bit stronger support level there. But what I look at is what would happen if it doesn't hold the support level, because I really almost sold the 40 looking at this chart. But with the volatility and uncertainty in the market, I decided to look at what is the next leg down. And really, it's about the 40, right? Right around here in this 40 range. But I said, well, where is it? So I looked at 38. And you got this big, sideways consolidation here at 38, where if this were to fall through the 40s, that it would probably hold up right in this range of the $38 range. So that's where I put it. It's kind of, it doesn't look good because it's below its 500 and 200-day moving averages. But with interest rates talking about going up as well, that is actually a good thing for banks, because they make more money when the interest rates are higher, because the spread of the money, they profit more. So I decided to go $38, which is right down in here, this support level, and I think that will hold, or at least I'm comfortable with that. So I sold a 38 strike out to April 14th and got $103 for that contract. So those are all the openings. Not too much this week again. And let's go ahead and take a look at premium cooking. So we take a look at it, the summary wise, week ending of March 1st. We closed 3 positions, opened 5, realized profit of $370.29. Premium sold $767.05, so a light week, but our premium cooking went up to $5,430.16. Maintenance margin jumped up a little bit to $31,100 for 27% buying power usage there. Cash balance jumped up from $83.60 to $83,615. No deposits, no withdrawals. Net liquidation value went from $113.5 to $115.5, so a nice turn there. Return on maintenance margin 1.32%. That is the profit realized divided by the maintenance margin of the previous week. And return on net liquidation is 0.33%. And that's the profit realized or income realized versus the net liquidation of the week before. Now you'll see I don't have anything expiring until March 18th. That's a good chunk of it, $333. And then at the end of March, $1,152. And then we're building out April right now, and we got $767.05 going there. Now, how did we do? How do I feel about it? Well, because if we look at the quick overview, it's not bad. February ended with about $233.88 in realized option income. And I'll take it. The way this market has been, I like that it's not a negative. So can't complain there. But overall, I'm not in bad shape. If we look at the percentage decrease calculator, this is the year-to-date number. Starting value, $123,100 is what we started net lick in January. Right now we're sitting at $115.5. So overall, 6% decrease year-to-date. Now, if you compare that to the indexes overall, we're doing quite well. Because you'll see the S&P 500 down 10.22% for the year. Russell 2000 down 11.6% for the year. NASDAQ down 14.5% for the year. And the Dow Jones, the best of the bunch there, down only 9%. So with us being only down 6%, I can't be upset at that. So that is all I have. Like I said, tune in to Saturday and I'll share with you how I'm going to manage a smaller portfolio, right? I do the retire with less with $250,000, right? That's that paper portfolio. Well, I guess I'm going to be doing sort of kind of retire with less extreme because I'm not even close to $250,000, and we're going to try to pull income off of this and stay semi-retired, right? So anyway, hope you guys had a great week. Like, share, subscribe, do all that good stuff that I say all the time. Leave me a comment down below. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.